Hello and welcome to Best and Worst Trades of the Week. I'm Brandon and I'm with Rosalie, aka Crypto Queen, with very cool background behind her. And yes, we are excited to be going over some interesting positions, including Delta Neutral LPing, which is the talk of the town. But in some cases, it has been pretty bad for some traders. So we're going to look into those trades and see what the traders did wrong or right, and how you can prevent going down the same unfortunate path, perhaps. So without giving too many spoilers, welcome to the best and worst trades of the week. Rosalie, how are you doing?
Good. I'm doing good. I can't get over this funny image that we have as our title image today. ChatGPT tried to generate Guillaume. That does not look like Guillaume, but it's very funny. I like it. I'm doing well. The market seems to be looking up, and I was looking at interns' portfolio. I know we've been kind of quiet this week. We've been very just heads down working, and some people are taking vacation. It's midsummer, so I'm happy to see that interns trades are doing well, even though they haven't been managed as much this week. So yeah.
Passive intern is still winning. So that's only if you trade perpetual options, I guess.
Yes,
Well,
very much.
great to hear. And yes, the image that you saw here was created by the newest ChatGPT model, GPT-5, that was just released. I noticed it about 10 minutes before we started this stream. I was on ChatGPT model 3.0, and then I refreshed the page, and there it was, GPT-5. So I had to give it a try. But as we see, even though we get new models, they're still improving, because that doesn't look like Guillaume Lambert. But yeah, today we have Rosalie and Brandon. Next week we'll have this live stream Monday, Wednesday, Friday with Guillaume. And Tuesday we have a research hot topic on perpetual options on a research piece we just launched. And you can see that on our Twitter. Down below, you see the scrolling Twitter banner that you're probably watching this from anyways. But some cool research that we put out. X articles is one of my favorite things now. We post all our blog posts and research as X articles, so you can quickly sort through and see all the articles that we've been putting out there on our page. So make sure to check that out on our X. But we'll be discussing it with our researcher Amy on next Tuesday. But anyways, let's get into the trades of the week. Starting off first with interns trades. Were there any you wanted to highlight? Or
Yes. Yeah, I wanted to highlight the intern portfolio. I'm going to share my screen, and we can just look at a couple markets. We don't have to go into so much detail. But yeah, so basically the last time I looked, this number was red and negative. So I'm happy to see that it's gone up a little bit. The markets have kind of changed. I think it's ETH price has gone up. But yeah, so if we look at these positions here, we had this hedge that we created to in case ETH went down, and these were red. This was green last week, but now it's looking kind of opposite of that. So I'm happy that we're hedging, but also happy to see that the original bullish trades are profiting. This is a great position here. We have a long put and a short put, but the long put we're not paying for. So we're buying this option. It's a free option because the liquidity is out of range. So we don't have to pay until it's in this range. And yeah, we're, making profits. We're almost at the break-even point, but we still have some gains to make here. So this is looking really exciting.
yeah, this is a great trade here. ETH price has gone up 12% in the last 5 days. Significant moves up. In the meantime, Bitcoin has gone down 1% in last 5 days. But this is a nice position to see, as you pointed out, a very free option. So it can't get better than free there with this spread here. You typically fund the option that you buy with the option that you're selling. And it looks like right now it costs nothing to buy the option and you're just earning from selling. Can you click on the Premium tab so we can see kind of just the net overall how this has performed funding wise? So
Yep.
as we see, most of the time, actually the sold option has been earning more premium than the bought option has been paying. I know people have been asking us, what's the point of perpetual options? I thought the whole point was with options was that you get paid your premium up front. You can fund yourself. You can create these spreads where you get income up front instead of having to pay. And it's actually pretty similar because here you create a long position and a short position. One of them you get paid the funding, and the other you pay the funding. But as you see with this chart, everything's positive, which means that overall we're getting paid rather than paying to hold this position. When the curve slopes downwards around August 2nd, that means you are paying a bit more than you are receiving in funding. But for the most part, this position has been up and to the right.
Yeah, I think this is really great to be paid over time because with every block, there are more and more fees accumulated as long as you're in range. So you can really, if you pick the right range, you can just keep accumulating fees for a really long time. And you here as well, we're profiting from a price move as well. So this is very exciting to get both the profit from the price move and the Streamia as we're in range.
Couldn't ask for more. We're in a great position here on that chart. If anything, the price goes up a little bit more and it's perfect. But honestly, this has been great for that spread.
Look at that. The price is just changing as we go. Our Bitcoin ETH position is going up as well. This is the ratio trade, which is really exciting. Here we were betting on Ethereum outperforming Bitcoin. And if we look here at the price chart, we can see what the price was at mint and where it's at now. So ETH, in fact, is outperforming Bitcoin at the moment, and we are making some Streamia here and profiting from the price move as well.
Awesome. I was just rearranging our cards so you can see that price chart better, but great to see. So this is just an LP position, right?
Yeah, so this is a short put. This is exactly the same payoff curve as you would from simply LPing into Uniswap.
Sweet. Bitcoin ETH ratio. So looks like it's gone up since.
Yeah, so I think before, it was down for a little bit, but now it's going up. So I'm very happy to see that. Ratio trades are very complex sometimes, in my opinion, but I'm kind of getting the hang of things now. So I'm glad to see that we're earning here. And it's not too big of a position either. So this looks great. And then I wanted to look at one more market for Intern's portfolio. Let me pull it up.
Intern's been doing so good. We might have to give them a pay raise here.
Yes, definitely.
Put more money in there. All these trades are so small, but some really good percentages I'm seeing here.
I know it's always frustrating when the trades are so small and you're kind of making the right move. But yeah, let's look at this strangle that we have here. This is in the Bitcoin USDC pool. And here we are in range. We have two legs, and so we have twice as much capital efficiency here. And they're both in range, and we are earning some premia, which is really exciting. And hopefully this chart can grow a little bit more. I think we picked a pretty good range here. And so we're just going to keep this open and keep continuing to earn fees.
Yeah, it looks like it started out maybe 35, 40 delta on one side. Now it's 65, 70 delta on the other side, I guess. This is a delta neutral position. So like 10 delta on one side and then 10 delta on the other side. So it's kind of just moved from one side to the other. That's nice. No gains or losses except for the premium that this is harvesting. So this is one of those delta neutral LP positions that we're going to talk about. It's not necessarily one of the best or worst trades just because the size of it is quite small. But I think this highlights very well that delta neutral positions can do good when they do good. And in this case, it has done very well. Can you go back to the position info?
Yes. I think, yeah, there's always, there's risks on both sides, right? And so you can start losing money quite quickly once you're out of range. But the sweet spot is really just here. You're hoping that the price kind of flips back and forth and stays kind of here in this delta neutral position while you're earning fees.
Yeah, this is really like kind of what people think of when they LP and get it confused with impermanent loss. I think there's a lot of confusion over impermanent loss. People think their LPs are like a straddle because of the way impermanent loss works, which is when the price goes down, you lose compared to hodling. And when the price goes up, you lose compared to hodling. This is different because this is an actual straddle. This is two LP positions, which means that when the price goes down, you lose, and the price goes up, you lose. But it's not impermanent loss. It's literally if the price goes up, you lose money. Whereas with a normal LP position, when the price goes up, you make money, but you lose compared to hodling. And so there is a difference here. I think people, when they trade LP positions, they actually want to trade straddles because that's how they're thinking about LPs. They're thinking when the price goes up, they lose. And so the straddle is actually the perfect fit for you because when you trade this delta neutral LP position, you're actually delta neutral when you start out. Whereas when you trade a normal LP position, you're 50-50, which means you're 50 delta. You're not 0 delta. If the price moves, your LP composition changes significantly such that you gain money if the price goes up or you lose money if the price goes down. But since it's 50 delta, that amount is halved. So you basically, if the price goes up $1, you're earning half of that. And if the price goes down $1, you're losing half of that. But with sorry for the phone notifications. That's mine, not yours if you're listening to this. But with the straddles, it's different because when the price goes up initially 1%, your position value changes by nearly 0% because it's actually delta neutral. So this is what a delta neutral position is. It's an LP position combined with an inverted LP position, which we call a put option and a call option in Panoptic. But it's all just LP positions in the end.
Yeah,
So
I like the way you explained that and the confusion about around impermanent loss and LP positions. I think the one that we were looking at earlier, the put option, you can clearly see that there's capped gains, right? So you stop making money as the price goes up, but so that's kind of on one side it's one token, on the other side it's the other token. And so I think that's kind of really where people are confused because it's still range bound, right? So they think of it in terms of range. But here, yeah, we can clearly see that this is kind of the more ideal outcome since you're really collecting fees in that range. But we're going to look at some other LP positions as well that maybe aren't doing so well. I mean, this is just 4%, $13. It's not that exciting, but at least, we're making some premia and we have a small position. So yeah.
Wonderful. Well, hopefully that made sense to everyone. If it didn't, let us know if you want to see a tutorial on what LP positions actually look like and what impermanent loss actually is. But let's get to some of the trades of the week. We're going to look at the top trades and some of the worst trades. They might be your trade. If they are, we'll keep things quiet and not reveal who it is. But unless you want to out yourself, feel free. This is live, so feel free to comment on YouTube or Twitter in the comments, and we'll get to your comment. Now, Rosalie, we like to play the guessing game and ask you, what do you think was the best trade on ETH options? And we'll look at the Ethereum mainnet market first.
The best trade, I think because the price has gone up, we're close to 4K now, which is not enough, but it's going up. I think I'm going to say maybe like a short put.
Sweet. Okay. And why do you pick a short put as your best trade?
Because it's a simple option. I think people, people are doing delta neutral positions as well, but I think people like to just either buy or sell one leg and not make it too complicated. And I think, yeah, they're betting on ETH going up. So,
Okay, sweet. Well, let me share my screen here so that those who are visually looking can see. And I got to make sure I share the right one because I have the worst trade also pulled up here. But we have two best trades that I wanted to highlight. And you are correct. So cue just kidding. We don't have any sound effects, but good job. Clap for you here. The WETH USDC pool, we have a short put option, which is an LP position. So you nailed this exactly on the nose. This is an LP position that started out about 50 delta and then ended up at 0 delta. So what that means is that it started out 50-50 kind of ETH and USDC. The price went up. It got converted completely into USDC. Congratulations. In a normal world with impermanent loss, people get this confused and say, hey, this person lost money. But no, we show here very clearly on this P&L chart to dispel the confusion of impermanent loss that this person made money. Now, did they lose relative to hodling? Sure. They would have made more money if they just held ETH. That's for sure. But that's not the point because they also earn some streamia here. They earn LP fees. And you can look at that over time, how much they made. So you see that goes up and to the right. And I'm curious how much that is compared to Uniswap. So I think there's a bug here. So we can't tell. But when that's fixed, we'll learn how much more they're earning because they are earning more on Panoptic than Uniswap with this option buyer thing. Basically, someone can borrow this LP position in Uniswap because it was deployed through Panoptic, and they pay you your LP fees plus an options premium, so they pay you extra than what you would have earned, and that means you're going to earn some juicy fees. On average, we just ran an analysis, I think this week, and we're still looking at an average of about 20% premiums to Uniswap fees if you LP on Panoptic and have an option buyer. So, for example, if you're earning $500 in Uniswap, that means on average, if you have an option buyer, you're earning $600 in LP fees on Panoptic. But this is a great trade and has gone north and very, very, I don't know if you can even say that, but it has not gone south. It's gone north. It's done well. So what are your thoughts on this position and this short put?
Yeah, I think it's great. It is out of range now. So if you're listening, it's time to close your position. Good job. You made almost $700. So this is great. I think, the point is to figure out what to do with your ETH or other tokens while you're holding, right? While you're waiting, because I think a lot of us, we've, bought tokens and we're not really sure what to do with it. We don't want to sell. I'm sure this person also has some ETH in their wallet still, and just kind of figuring out a way to either make directional bets or earn some fees in the meantime. And so I think they did a good job here on both the directional bet and earning fees.
And another point that you just reminded me of is the commissions in this position were paid in USDC. So on Panoptic, put options are always paid in one token, in this case USDC, and call options are paid using the other token, which would be ETH. So basically, you can actually fund your portfolio on Panoptic with just stablecoin. You could just deposit USDC in. You could create this position, pay your 20 basis points to open the trade in USDC. And then if the price moves entirely up, I think you can actually close this position without ever depositing ETH. There's some cases where you have to deposit like a little bit of ETH, but for the most part, you can fund this trade entirely with USDC, which you cannot do in Uniswap. In Uniswap, you have to supply both tokens in the exact ratios, like 50-50, 60-40, wherever, depending on where you choose the lower and upper price. So it's actually really cool that you can do this entirely with stablecoin. And in that case, then permanent loss here is negative. Like you're impermanently gaining stuff. Because if you had just held USDC for the last 7 days, you would have made nothing. But this position made 18%, which means this is impermanent gain if you calculate it that way. So I want to dispel all of the impermanent loss kind of misconceptions. And the whole framework kind of gets turned on its head when you no longer have to LP with both tokens.
Yeah, this is great. I didn't know that it was different for put and call options. So I'm glad learning something new every day in the world of options. I like it.
That's right. And I did want to highlight one other top trade here. So this trade didn't do as good because it's just a smaller position. It's 1 1/3 contracts of ETH as opposed to 5 on the last one we just saw. But it has a much higher P&L percentage at 32% in just 5 days, which is crazy insane because 32%, that's the net. That is the fees plus the price changing. And minus the commissions that they paid. So this overall is net 32% in 5 days. That is an astronomical amount. Now, why did this LP position do better percent-wise than the previous LP position here? I guess that's a quiz question. Do you have any guesses why one LP position did better percent-wise than the other position?
Yeah, it's because of the range. So this one's still in range, so it's collecting more fees, right?
So this one is in range, but it's been in range for the last 5 days. The last one was in range for, from August 1st to August 6th. So it's also in range for 5 days. And surprisingly, so it's not quite maybe the time in range, although that definitely helps to be in range longer. Here's another like confusing thing is the position that didn't actually do as good percent-wise is a 1-day option. So its price ranges between 3,500 and 3,750 approximately. It's much more narrow. So it actually earns more fees when it is in range, and which it was in range for about the same amount of time. Whereas this position that actually did better percent-wise is wider. It earns less fees per unit of liquidity. It's from 33.60 to 42.70. So you'd think actually that the other one did better. So the actual answer of why the wider position did better is because they positioned it to start at a closer to 100 delta when they opened it. And so if you zoom in here and look at this, you'll see that the price at mint, so the price when the position was open, actually started very close to their lower boundary. So they LP'd at the lower price of 33.61. The price when they LP'd was 34.88, which means their delta was very high, and they were very directional. And then because the price actually went up in the direction that they were hoping for, they earned a lot from just price appreciation. If you look, the Streamia is only about 1/7 of their P&L, whereas the Streamia on the other position was nearly like 90% or something of their P&L. And so just where you open the LP position, in this case, about 50 delta, and in this case, about almost 100 delta, is going to determine how much you're betting on the price actually moving in a certain direction. And if you're correct, you're going to get even more gains.
Very interesting. Okay, cool.
Sweet. Well, that gives you 1 for 1. Let's see if you can keep up with the guessing game here. We're going to look at the worst position on Ethereum with these ETH option, perpetual option markets. What is your guess for the worst option trade of the week?
Maybe a short call, just the opposite position because short put did well, so maybe short call didn't do so well.
The logic is logicking, and you are correct again. 2 for 2. Short call. So what is a short call? A short call is an LP position where you borrow ETH. in order to you don't bring your own ETH. You borrow it on Aave, for example, and then you bring it to Uniswap and LP it with USDC. So what that does is it creates a debt position where you owe ETH, and you're basically short ETH at the same time that you're LPing in Uniswap. And what that looks like is a call option where when selling a call option. So when the price goes down, you benefit a little bit, and when the price goes up, you lose a lot. But at the same time, you're earning premium when the price kind of stays near the current price and wiggles around. So that is a short call position. It's inverted to an LP position. An LP position is bullish. A short call is slightly bearish. And this position has lost quite a lot. It's a large position, 7.5 ETH contract, so it's worth about $25,000. Now it's on leverage slightly, about 1.3x leverage or something like that. But yeah, it started out with the price at 3,500. The price has gone up, as we know, in the last 6 days, and so we're now at 39.52 as we're speaking. And so although the position earned $190 in LP fees, it has lost more than $2,000 from the price moving. So this is approximately a 50 delta position, and it is now closer to 100 delta. So it's gone wrong, unfortunately.
Yeah. What a shame. That's okay. Yeah, probably a good time to close this position now, maybe take some losses unless you're fairly certain that, the price is going to go back down. You never know.
1 month position, so I think maybe they're planning on holding it a bit longer.
Yeah.
It's still in range, so technically still earning premium, but it is getting more and more risky because as the price goes up, you lose money, the delta goes higher, which means you're more exposed to the price going up and losing when the price goes up. But as we've seen with Inter, sometimes the price goes down or up, and we're back to where we started from. So this position could go from negative to positive very quickly if they stick to their guns of thinking that the price is going to come back down close to the 3,500 range. Do note, nothing we say here is financial advice. Please do your own research. This is for educational purposes only. But hopefully we can give some fun tips here on how we might manage this position. So it sounds like, Rosalie, if you were this user, you would either cut your losses at this point at 10%. 10% is a good stop loss, or you would keep it open if you think the price is going to come back down.
Yeah, I would. I think the range for me personally feels like it's. I would close it. I'm not this bearish on ETH, but it could also be a hedge, right? So you never really know. But yeah, no, this person is very bearish.
Could be selling covered calls, and there's actually a good way to investigate that. So if you click on the transaction, you'll see the actual user. You can copy that, and then you probably won't be able to see this, but if I go back to the portfolio page and we type in view as in the URL, $view_as equals, and put in their wallet, you can see their holdings. And so we're now spectating this position or this entire portfolio. And as you see, we can click in. We can see what their overall portfolio is. They have quite a few positions. They're not just a short call. It looks like they actually have many positions open at the same time. So overall, their payoff is quite neutral. If you include their deposits, meaning their collateral and how it affects their payoff, they're actually pretty bullish overall in general. So as you point out, this is one position in a portfolio of many. And so actually their NLV, I would guess, has been going up over time because they are structurally bullish. So yeah, as we see, they're actually making money on Panoptic as we speak. But good Good point out.
Great to see. Yeah, they had so many positions that a lot of them were green. I think only 3 of them were negative. So yeah, I think it's great to hedge your positions as well. This person seems to know what they're doing, so we're happy to see that. Before we move to the trades on base, I wanted to highlight a question. We have 2 questions from a user, so I'm not sure if you
Sweet.
can answer them. Yes.
Yeah, let's show them down here. So how do you ensure continuous delta neutral while LP tokens prices are moving, especially on volatile pairs? This is the question, the golden question. And we have our research team actually doing some great research on delta rebalancing thresholds and the like. So obviously manually it's quite hard because the price could move 10% when you wake up. And now you went from a 0 delta position to a 50 delta position, right? So things can happen fast. So obviously, if you can automate things, then that is key, right? To catching things when you're asleep. But I'm going to share my screen here. Maybe we can do like a little demo of the trade page, and we can go over how you can make like a wider position. So one way of staying more delta neutral on volatile pairs is kind of you expect more volatility. So you expect these price changes to be more drastic. So we're going to create a short strangle or straddle here, for example. One thing you can do is do a strangle, by the way. That is much more retail friendly. I know we talk about straddles a lot. Strangles are a bit more widened out. So the strikes are further out. They're basically overlapping. The 2 LP positions are overlapping less. But that does create, a much more flat kind of area. The trade-off here is that you might go out of range on one of the legs and then you would earn half as many LP fees. But as you see, like from here, right, this is going to be a straddle where the 2 strikes are right on top of each other. But that means the delta changes much faster when the price moves plus or minus 5%. If you spread these legs out a bit, I think you get a slightly wider delta, which means that when the price moves plus or minus 5%, your delta changes a little bit less. That's one way, but the main way is probably doing just things at a wider time scale, right? So let's go 1 year, for example. I know one of our friends at Panoptic really likes their 1 year positions. So these are much wider positions. For example, this is an ETH lower price of 1878 and a higher price of 8,417. This thing would be raking in fees over the last like 5 years or something. I don't know. The ETH price has been in between these 2 prices for quite a long time. I guess the ETH price dropped to like 1,000. So you could do like 1,000 to 4,600, for example. That would have been in range for a long time. But basically, your delta is now kind of even more gradual. So basically, your gamma is a little bit smoother. So if the price were to move plus or minus 5% with this wider dated position, your delta is going to stay much closer to 0. So it's all trade-offs in the option world. If you do this, you're going to earn less in premium because your liquidity positions are wider. They're less capital efficient. They're earning less fees. But at the same time, you have to stress less when you go to sleep. And sometimes that's what matters most, is getting a good night of sleep. So this will flatten out your delta a bit more. But I think the Holy Grail might be something like a vault that auto rebalances the delta once it moves a little bit too much. So we'll see. We're doing a lot of research into this. So hopefully we get some more detailed research reports to help you with your question here. But in the meantime, let us know if you have further questions on that. I think there is one other question here from Merso. Another question, if I may, is the delta computation for LP position public to better understand the hedge algorithm? Great question. The delta composition for an LP position. We do have Python-like SDK code. If you've heard of Hummingbot, it's a very popular trading kind of algorithm for retail to code in Python. Now it's like Rosalie and I can do it because ChatGPT 5 is out. Python is even easier with LLMs. But the point is, we do have public code out where you can see the actual delta composition. I think we've done research bytes too in our open source repository of research, where we have functions that calculate and show you the delta of a position. So yes, there's also Medium articles from Guillaume. So I know I'm listing a couple of things here, but basically, if you head to our GitHub, so it's going to be github.com/panopticlabs. I'll share this on the screen. github.com/panopticlabs. If you're into the coding side, or if you're not, you can throw it into ChatGPT 5, ask it to give you the formula. But yes, it is based on LP values. So Guillaume Lambert's Medium articles are also very popular. I know a lot of people really like this for digging into LP stuff. But there's one article where he goes into the LP position and the formulas to how you value it when the price changes. You take the derivative of that with respect to the spot price. So the first derivative gives you delta. And so that is going to be the formula. So if you want to know, I can't remember off the top of my head which article it is. So feel free to ask us on Discord after. But Guillaume's Medium articles here, I just Google search Guillaume Lambert Medium and it always pops up. But if you want to click on, copy this link, lambert-guillaume.medium.com, there is an article in there that discusses the formula there. It's just the first derivative if you know math. But yeah, super awesome. Great questions all around. Let's go into some of the best and worst trades on base. So you're 2 for 2. This is a perfect record so far. I think maybe the best record we've seen, tied with Guillaume on this show. So what do you think is the best trade on base, and what do you think is the worst trade? We'll hit them both at once.
Okay, I'm gonna guess maybe I guess strangle.
Okay, short strangle or long strangle?
Short strangle.
Okay, so selling a strangle. This is the worst trade or best trade?
This is gonna be the worst trade.
Okay, the worst trade is a short strangle. And what do you think is the best trade?
The best trade, maybe a long strangle.
Okay, so selling a strangle is the worst trade, is your guess, and buying a strangle is the best. Wait, did I get that right? Buying a strangle is the best trade, is your other guess.
Yeah, let's go with that.
Okay, so let's take a look at the worst trade. And wow, you are on a roll, because the worst trade is literally selling a strangle, not a straddle, but a strangle. The difference between straddles and strangles, as we mentioned, are that the two strikes are at different places. So here we have a strike at 33.61 on the ETH price, and here we have a 35.26 strike. So someone sold a put or LP'd at 33.61, and someone sold a call or LP'd invertedly at 35.26. This trade has done poorly, but why? Why has this delta neutral LP trade gone south, as we mentioned here? Gone horribly wrong. Not too horribly. It's down 5 and almost 6%. It started out delta neutral, and this goes back to the question we were just discussing. How do you keep a delta neutral straddle delta neutral? Well, this straddle did start out delta neutral and has now gone to not delta neutral. Excuse my phone notifications. That's mine, not yours, if you're listening to this. But this position has gone south because the price has moved so much up in the last 5 days. Now, the position was open 6 days ago and closed 4 days ago, so it was held just under 2 days for a loss. But the position did go south because the price moved. It was too volatile compared to where it started. So it only earned $50 in fees, but it lost about $200 in price movement for a net of about $160 overall. So this position is a bad example of what has happened. I'm going to show you a position that is very, very similar, but actually did the best trade of the week on base here. So here is the best trade. I just switched tabs. It might not look like it because it's almost the exact same position. Another delta neutral LP position, or in this case, a straddle at the 4,000 strike. So you notice this is a higher strike, which means that when the position was opened, the position was not delta neutral. The position was actually closer to something like a 50 delta position. So the user was betting that the price would actually go up. Mostly that the price would wiggle around, but slightly they were half confident that the price would go up. And they were right, because the price did go from 3,600 to almost 4,000 now, putting their position at a huge win, not only because it's earning and raking in LP fees and Panoptic premiums on the way up, but because also the position is now delta neutral. It went from being not delta neutral to delta neutral. I'm not saying that you should do this when you create straddles, but the point is that if you can stay delta neutral or get to delta neutrality, that is optimal, because this position is going to earn fees. Fees are always positive. We know that streaming is going to be positive. So then it's just a question of managing price volatility. And in this case, the volatility happened to go in favor of their position. But either you have to be right about that, which lucky guess here, good job, or you got to manage the position well, as we just discussed. Close the position when it goes not delta neutral and reopen it when to be delta neutral, or create a wider position so that you have delta neutrality for longer. But those are the two best trades. You're 3 out of 4, Rosalie. So nice job, 75%. That's your best score on best and worst trades here yet. Do you have any advice for our delta neutral LPs here?
No, I think these look great. The other one wasn't doing as well, but I think it's really interesting what you said about the slopes and the deltas, as well as we saw with the short put on Ethereum, kind of the difference between why one position had more than the other one. And so, yeah, I think this is really interesting. Kind of getting that soft spot can be difficult sometimes. It is, a guessing game, and there's always, you win some, you lose some. But yeah, I think I'm happy to see so many people trading on Panoptic, and yeah.
Awesome. Well, I'm a little late on these comments, but yes, I'm glad people find this interesting. I think a lot of LP kind of mindset needs to be reframed in terms of delta. It's very important to think in terms of delta. And we don't do it enough. So if you don't understand what 50 delta is, maybe we need to do another segment to go over that. But do your own research. LP positions are cool. You can do cool stuff with them, and you can do even cooler stuff with them on Panoptic, like make them 0 delta, and hopefully you can keep it that way. So thank you for attending our TED Talk of delta neutral positions gone horribly wrong and how you can manage them a little bit better. We hope these tips help you. Do your own research. Nothing said here is financial advice. And we will see you after the weekend next week on Monday to go over the intern portfolio. Hopefully intern's back from vacation at that point, so we can do some good trade analysis and some new open positions. We'll stay tuned for some more updates regarding our vault audits. So those are starting soon. So we'll give some updates on the reports. We did one audit already with Codarena. That was a competitive audit. So congratulations to the winners that are being decided here shortly. And we'll update you with some reports and some cool events that we're having as far as trading competitions goes. We have one in the works, so it might not be this August. We'll see. We're going to release more details there soon, but we got some really cool incentives for you guys coming. So stay tuned and have a good weekend. Rosalie, any parting words?
No, just, happy weekend, and hopefully, the market's going to keep going up. It's looking good now, but we'll be back on Monday.
Up